Hello everyone, welcome to the Ichimoku.co daily stock market review for the trading day ending Thursday, August 6th. Firstly to the S&P 500, and here we've seen very strong selling coming into this market today, a very large black body candle that follows the change of trend to the upside from the previous day's trading, but on a very large shadowed candle, that large shadow on the top of a very small body, and the market testing above the important 2100 round number level of resistance, unable to close above there, with very strong price rejection coming into the market, and that set the market up for this change of trend back to the downside. Today we've seen the sellers take control again, very strong downside momentum, but once again finding support within this highlighted yellow zone. Now the inability of the market to close within there suggests the possibility that we could see some buying coming, but the short-term dynamics in the candle are certainly not favouring the buyers here at all. The strength here is with the sellers. They've closed with control and moderately strong control, except for that loss of commitment down near this zone, and it suggests that if the sellers are strong enough they could trade to within this zone. Now the zone extends all the way down to 2040, so it's a long way before we'll be convinced that we have the beginnings of a very significant downtrend in that longer term time frame on the daily charts. But as I've mentioned recently in the past, all of the market churning above and below the Ichimoku cloud suggests that there is a lot of indecision in this market, a lot of volatility at the moment, and it is starting to suggest that it looks like the market could be attempting to form a top. But let's not preempt the market. Let's wait until some of these key areas are taken out before we're convinced that we do have a significant downtrend in place. Now just looking at the bands here, and this highlights the indecisive nature of this market at the moment. The market testing down below the bands, then above the bands with a lack of follow through, testing all the way down to the bottom band, finding support, trading up close to the upper band, finding support around the middle, and now finding some support just below the lower band. If we do see some strong follow through for the next couple of days to the downside, and if we can breach down through these levels here, then we could see further development to the downside. But at the moment all of this says indecision, and if we look at the width of the bands, it's quite wide compared to some of these times where we've had the bands squeezing up, so it suggests that there is quite a bit of volatility in this market as well. Looking next to the Dow Jones 30, and here we see a very different market than we've seen with the S&P. This market is a little bit more developed to the downside, and the important thing is that where we saw the S&P hovering above and below the Ichimoku cloud, at the moment now we've seen some strong development of the trend to the downside, with the market failing to test back up to the cloud. What we saw last week was, or the week prior, was the market trading down below the important support of that highlighted zone, trading down through to the support around 17,536. The market then rallying to find resistance now within that yellow band, and then for this week being strongly rejected from there, but also importantly finding strong resistance at both the Kijun-sen and the Tenkan-sen, and selling off very strongly from there today. This has created a second time frame downtrend. If we look, we have a series of lower peaks and lower troughs, and today we've taken out the trough, so we have a peak, a trough, lower peak, and a lower trough established today, and this suggests that we could see further development to the downside. Now a lot depends on how the market reacts around 17,350. If that area is breached in the bearish manner, we could easily test to 17,151, or even further down to 17,074, or down to the 17,000 round number. Now looking at the bands here with the Dow 30, and here we see bearish activity down below the lower band. We saw a breakout, an indecisive breakout. If we do see strong follow through down through here in a bearish manner, we certainly could see further development of this very strong downtrend in the second term time frame. Next to the Nasdaq 100, and here we see formation of a very, very large black body candle today. Very strong selling in this market today. This was the weakest and certainly did lead the way down. A change of trend to the downside following an uptrend, and this very small white body candle, large shadow on the top highlighting the loss of commitment by the buyers for the previous day's trading, set the market up for this change of trend. Today the 4562 level of previous support, we can see the support here with these shadows, was taken out out very strongly, and the market tested just down to the bottom of this highlighted zone, an area where we've seen previous buying come in. So an opportunity here for the buyers if they're strong enough. But with this candle being a very large black body candle, the way the market has interacted within this zone seems as though the sellers have built some momentum, and there is a good possibility of the sellers continuing in this market to the downside and breaching the 4, 5, 10 level of previous support. If we look here, previously we saw a loss of commitment the last time we tested there, and then the buyers have come in. We've seen no strong loss of commitment, only a moderate amount of loss of commitment, about 45.10, as evidenced by the small shadow. So if we do see the market breach down through that 45.10 level, looking to support initially 44.83, and then around the Ichimoku cloud, which extends roughly down to about 45.55, I suggest we're likely to find some strong support coming in around this region. Next to the Russell 2000, and a change of trend in this market as well, this fairly large black body candle suggests that these sellers have found some very strong downside momentum. Looking closely, we've found support once again down below the 12.12 area. The last few occasions we tested there, 1, 2, 3, now 4, and down also at this window that was opened up previously. It's held on 1, 2, and now the third occasion the market has tested 2 there, and there's been some rejection from there. So we have some very, very significant support just below where the market's found support today at 12.12, and then down at the window, which extends down to about 12.04, and interestingly that's just above the round number 1200. So very, very solid support below where this market's trading. But if the sellers are strong enough, and if they breach down through that area, we could see continued downside development of this trending price action. Down below the 1200 round number, we have the 1191 level of previous support, and that could come into play. For today's candle, sellers have taken back control of the market, and very strong downside momentum, but a loss of commitment here, and more of a loss of commitment than we saw with the previous market, and that could be significant. Certainly, looking at the candles that we saw here previously, when we saw buying coming in, we saw development of a weak candle to the downside here with a small body, and here where the buyers took control, and then the trend resumed back to the upside. So we'll be looking for that, but certainly still watching for any bearish activity down below these levels. Just looking at the bands here with the Russell 2000, and this suggests that we are in a very strong downtrend in the medium-term time frame. We had the market breaking out to the downside, a rally, bearish confirmation, the market rallying to within the bands, strong breakout, gapping down with a strong confirmation, the market then rallying back to within the bands to find resistance at the middle band and selling off once again in a strong manner. Any strong selling here will further confirm this strong downtrend, but I suggest we should be watching this swing low 12.05 very, very closely for a bearish breakout down below there to further confirm this strong bearish downtrend in the second term time frame. Next, comparing some of the asset classes in terms of the ETFs to the US equities market. So we're comparing the V&Q here, asset class REIT, real estate trust sector here against the S&P 500 against the SPY, and just looking at the Ichimoku chart here of the V&Q, and previously we saw the market attempt to break out through the top of the cloud, and the sellers came in quite strongly. So we haven't had a transition from that neutral phase into an uptrending phase yet, but the opportunity is here with the buyers. On this current candle here today, the buyers have closed with control, and they've found strong support down at the bottom of the Ichimoku cloud. So it isn't a good opportunity for them to break out up above the cloud and develop this trend further to the upside. So we may be seeing some reallocation of resources away from the equities market into the REIT market. Looking at the relative strength comparative, no strong outperformance, but at times there has been. but just outperforming the S&P just slightly by trading just above the middle of the bands here. In terms of momentum of relative strength, it's actually moving down, so not a lot of confidence at the moment in some uptrending price action in that relative strength against the equities market at the moment. But I suggest if we do see a breakout up above the Ichimoku cloud and further development of the trend up above there, we could see that relative strength move higher. Looking to some strong resistance here around this 79.91 region to be broken as well. Next, looking at equities markets external to the US, and here we have a market that's trading down below the Ichimoku cloud, suggesting we still have a bearish market in the longer term time frame. But over the last couple of days, we've seen price action sustained above both the Kijun-sen and the Tenkan-sen, suggesting that we now have some bullish activity here in the medium and fast term time frames. The characteristics of the candles here are not terribly strong. They're black body candles for a start, and they're very small black body candles, so it suggests quite some indecision and lack of development of in momentum in net terms. But if we look at the relative strength comparative, where this the equities markets external to the US were strongly underperforming over the last month or so, now they've been performing on a par by trading back within the bands and very close to the middle of the bands. So we may be starting to see an allocation away from US equities to overseas external equities. And looking at momentum here of the relative strength comparative to the S&P 500, momentum is actually trending up, and we are perhaps seeing a flow into external equities markets. Next to TLT, that's the code for the ETF we're analysing. It's the iShares Barclays 20 plus year Treasury bond fund, so those longer term bonds. And here we've seen the market testing around the Ichimoku cloud. If you recall previously, what we were waiting for was a breakout to the upside to confirm that we are seeing a reallocation away from equities into the longer term bonds. And now we have a transition away from a strong downtrend in the daily time frame to a neutral market by trading within the Ichimoku cloud. Price action has been sustained up above the Kijun-sen indicator, indicating that we have a strong bullish market in the medium term time frame, so suggesting we certainly may be in a transition. But the inability of the market to breach through the top of the Ichimoku cloud suggests that we still require that confirmation and sustained bullish activity up above the cloud. In terms of relative strength comparative, strongly outperforming the US equities market, whereas we'd saw previously the market just testing above, then trading down below the middle of the bands. Here we've seen activity up above the middle of the bands for some time, and testing up above the bands on multiple occasions. So we're looking for sustained activity up above that upper band to confirm a strong outperformance, but we're not seeing that yet, and I'd say that that will come with a breach up above the Ichimoku cloud, and then also a breach above the resistance around the 123.78 area. Also looking at the IGF ETF, which is the Global Infrastructure Fund, and here we're seeing bearish activity below the Ichimoku cloud, some selling coming in prior to today's trading. The market testing down below the Tenkan-sen indicator, but the sellers losing some commitment down there and failing to close in a strong manner down below there suggests that we could see some buying coming in and a change of trend back to the upside. The market will need to breach through the Kijun-sen trading at $40.68 to $40.65, but a bullish activity up above there could see the market trade up to the bottom of the Ichimoku cloud. Looking at relative strength comparative, very strongly underperforming the overall market for quite some time over the last couple of months, but now for the last week we've seen the market start to trade within the bands and hovering around the middle of the band, suggesting that performance has been on a par with the US equities versus the SPY here. SPY, the S&P 500 ETF. So no continued strong outperformance, a neutral performance, and we may be seeing some allocation of funds to this asset class as well. In terms of momentum of relative strength, it is trending up and has been trending up quite strongly, still not above 100%, but a close up above the Kijun-sen and a test up to higher levels certainly could see continuation of that relative strength outperformance in terms of momentum, and then perhaps a test up above the upper bands for a confirmed strong outperformance. Just taking a quick look at a few stocks, and Facebook is the first one, FB. This is the weekly chart, and we have a downtrend in place for the week that has finished trading. We have seen some buying coming into the market for this week, but strong price rejection beyond the high of that previous candle and has finished trading. Looking to strong support at the Tenkan-sen at 89.28 if the market does continue to be rejected from these higher areas. But we do have a bullish market in all three timeframes at the moment, and relative strength comparative is still strongly outperforming up above the upper band and suggesting that we could see further upside price activity and outperformance against the overall equities market. Looking at momentum of that relative strength performance, however, it's not looking too good for this week and is suggesting that we could see that start to come off, so just watching very carefully. On the daily chart here today, we've seen some strong selling coming into this market, a fairly large black body candle with the sellers closing with control for today's trading, but finding support around that Tenkan-sen indicator trading at 95.27. If that area is breached, we'll be looking to strong support at the Kijun-sen 92.24 as we saw about a week or so ago. But if that area is breached in a strong bearish manner, we could see a development of the trend to the downside. Looking at relative strength, had been strongly outperforming the overall market for some time, and over the past week or so we've seen the market come back to within a normal performance against the equities market, so that strong outperformance is no longer there in the market, and that's because we've seen the market starting to congest over the last week or so, and that very strong dynamic uptrending price action has disappeared. So a lot now is going to depend on how the market reacts here. Are we going to see the buyers come back in and trade to the upside, or are we going to see a test down to the Kijun-sen and see that area breached? Next to Sketches, and Sketches SKX is the code, was a strong market that we looked at previously, performing well against the Ichimoku indicators on the weekly chart here, well up above each of those indicators, looking a little overextended in the depth away from the Ichimoku cloud, and more importantly the Chica span is supporting the bullish activity. Relative strength comparative is still trending up very, very strongly, and momentum of that is becoming, or has become even stronger for that past week with that strong bullish close. For this week, we are seeing some price rejection from higher levels and formation of a very small body candle, and if the market closes like that, we could see a retracement, but looking to the Tenkan-sen to hold a strong support at 134.82 if we do see the market begin to retrace. On the daily chart, however, we've seen formation of a strong black body candle here, and it's a bearish engulfing candle, and suggests that we could have formation of a bearish engulfing reversal pattern. So we'll be looking for confirmation, looking for a lower high and a lower low to confirm that for the next candle. Then that doesn't mean that we will see downside activity, we want confirmation. But if we do see development of a trend to the downside, looking to the Tenkan-sen to hold as very strong support at 140, 174, and if that is breached, the Kijun-sen 136.59 may hold as strong support. Relative strength comparative continues to trade well outside of the upper band, so suggesting we still have strong outperformance, but relative strength, the momentum here of the relative strength is suggesting that we may see that relative strength start to come back towards the bands, and we may not see further upside development. We actually could see confirmation of that downtrend, and we'll be looking then to the Ichimoku indicators, the Kijun-sen and the Tenkan-sen, to hold a strong support.